If this is, in fact, analogous to 1995, I think stocks have room to run if it is a mid-cycle adjustment by the Fed. And so we're looking for high-quality names that are attractively valued, no-brainer, and pay dividends mostly.
It was only a small gain that the Dow eked out, but of course enough for a record, given that we had one on Friday. Nice to see another one clocked up 12 points, 27,693.9. Ian, do you think record highs are justified at the moment with some of the risks we've got out there?
You know, at this point, I think that the answer is yes. You're seeing a lot of the fear and a lot of the risks sort of ebb a little bit. I think the biggest thing to keep an eye on, though, is the active management, especially hedge fund underperformance. This is creating what I call a synthetic short base, where they're long cash and need to catch up because they're underperforming quite a bit. This is what I think keeps a bid in the market into the end of the year.
And Andrew, what about you? We have another record close, albeit by a slim margin here for the Dow. Do you think there's still more room to run, or have we put in a pause for now?
Yeah, I'm shocked the market isn't weaker just because it's so overbought on a short-term basis. But I agree with the other two guests. I thought we'd have maybe a 2 to 5% pullback, but then strong into year-end, 3,200-ish. Just as your other guests have talked, for all the same reasons. But and I think that will continue in January. But it does feel to me some of these areas like financials and some of the cyclicals, they do look very overbought on a short-term basis.
Andrew, earlier on the show, we were talking about different risks in the market with Torsten Slok, and he talked about things like the inequality gap when it comes to income or even health care. But he also, of course, pointed to the trade overhang. What are the biggest risks to the market here going into year end and perhaps early 2020 in your view?
I think the biggest risk is not going into year end. I think the biggest risk is the election seasons coming up in early February. And if we have some candidates that maybe win the early primaries that are more left-leaning for the Democratic Party, will that create some anxiety in the market after a very, very good year for stocks? I think that's kind of the next issue the market's going to have to deal with. But from now until year-end, other than an overbought market short-term, I think it's clear sailing from now to year-end.